Assalamualaikum. So today we are going to present chapter 25 in Audit 2, which is Other Assurance Services. But before that, I want to introduce our group members. I am Syazana and we have Syarifah, Najwa, Nurnajeha, Nurul, Izzah and Najwa. So our first objective is to understand the level of assurance and evidence requirements for review and compilation services. The standards for compilation and review of financial statement is called Statements on Standards for Accounting and Review Services. This is issued by the Accounting and Review Services community, and this community is on the same level with auditor boards. Assurance provided by compilation and review is lower than audit since they require less evidence and cheaper than audit. Okay, you can see on the slide is a graph that shows the relationship between evidence accumulation and assurance attained. If you find this figure unclear, you can refer to your textbook page 752. SSARS review engagement allows the accountant to express limited assurance that the financial statements are based on the accounting standards. Okay, procedure suggested for reviews. First, we need to obtain knowledge of the accounting principle and practices of the client's industry. The next one is we need to obtain knowledge of the client, including the nature of business, transaction, accounting records, and others. Okay, the third one is the most important. It is to make inquiries of management to determine whether the financial statements are fairly represented or not. Okay, after that is to perform analytical procedure based on the accountant's capability, and they need to obtain the letter of representation, and lastly prepare the documentation. Okay, so this is the example of review report. So basically it is similar to audit report, so you can refer this form on report for the content of the report. Okay, if your client failed to follow the standards, the report must be modified. It should disclose the effects of the departure. Even if the effects have not been determined, the disclosure must appear in the report in a separate paragraph. A compilation service engagement is defined as one in which accountants prepare financial statements and present them to a client or a third party without providing any CPA assurance. When accountants expect the statements to be viewed by third party, they need to issue a compilation report at least to accompany the statements. There are 6 requirements for compilation. First is to understand the client in a written engagement letter. The second one is to know about their accounting principles and practices. The third one is, of course, to know the client's business. And the fourth is to make inquiries to ensure the information is satisfactory. The fifth is to read the compiled financial statements and beware of errors. And lastly, to prepare documentation in details. So there are 3 types of compilation report. First is compilation with full disclosure according to accounting standards. Second is compilation that omits substantially all disclosure. And lastly, a compilation without independence. So this is the example of compilation reports with full disclosure, and this is the compilation that omits substantially all disclosure. So you can refer both of them in your textbook page 756. So for all types of compilation reports, the elements needed are, first you need to have the report title. Second is the date, a note on each page that says see accountants compilation reports. And if the client failed to follow the accounting standards, the auditor must include modifications that are used in review reports. So we will proceed with the next presenter.
Assalamualaikum Madam, I am Nurul Izzah binti Rashid. Today I will explain about a special engagement to review interim financial information for public companies. I will explain about review of interim financial information for public company. The SEC Security Exchange Commission requires that quarterly financial statement be reviewed by the company external auditor prior to the company filing of the Form 10Q with SEC. The SEC also requires a footnote in the annual audited financial statements disclosing quarterly sales, gross profit, income and earning per share for the past 2 years. Typically, the footnote in the annual statement is labeled unaudited. At minimum, the CPA firm must perform review procedures of the footnote information because the same CPA firm does both the annual audit and the public company interim financial statements review. They are referred to as auditors, not accounting for the interim review. Like review under SSARS, a public company interim review includes 5 requirements for review service engagements. The auditor must firstly obtain knowledge of the accounting principle of the client's industry. Second, obtain knowledge of the client. Third, make inquiries of management. Fourth, perform analytical procedure. And lastly, obtain a letter of representation. Also, like SSARS reviews for public companies do not provide a basis for expressing positive opinion level assurance. Ordinarily, auditors perform no test of the accounting records, independent confirmation, or physical examinations. However, types of review differ in several areas. They are the key differences. Because an annual audit is also performed for the public company clients, the auditor must obtain sufficient information about the client internal control for both annual and interim financial information. Similarly, because the client is audited annually, the auditor's knowledge of the results of this audit procedure is used considering the scope and the result of the inquiries and analytical procedure for the review. Under SSARS, the auditor make inquiries about actions taken at directors and stockholders meetings for public company. The auditors read the minute of those meetings. The auditors must also obtain evidence that the interim financial information agrees or coincides with the accounting records for a public company interim review. For example, the auditor might compare the interim financial information to the general ledger. A public company interim review is performed following standard of the PCOB, and the review reports make no reference to SSARS. Figure 25.5 for example of search report. Each page of the interim financial information which accompanies the report should be clearly marked as unaudited. If the auditor determines the interim statement violate accounting standards, the report should be modified. The language of the modification is similar to that used in a review under SSARS, except that the auditor should state the effect of the departure if the amount can be determined, the quarterly data review by the auditors, and include as a footnote in the annual audited statements. The annual audited statements should be labeled unaudited. However, a separate review report for this information is not required.
Assalamualaikum and hi, my name is Syarifah Najwa binti Nurul. So today I will proceed to the next learning objective in chapter 25, which is distinguish AICPA attestation standard from auditing standard and know the type of engagement with type of engagement to which they applied. So as we know, the short name, as we know, AICPA is the short name from American Institute of Certified Public Accountant. In this learning objective, we will learn about attestation standard, type of engagement, and also the level of service that they use based on the type of engagement. Okay. Firstly, the AICPA has issued 11 attestation standard that parallel to the 10 generally accepted auditing standard GAAS, as shown, as we can see in the table 25.1. Okay, the attestation standard are stated in sufficiently general terms to enable CPAs to apply them to any attestation engagement, including the new type of engagement that may arise. Okay. The most notable differences in the attestation standard and the 10 GAAS are in the General Attestation Standard 3 and also Standard 2. Okay, Standard 2 and also Standard 3, sorry. Okay. For the Standard 2, Standard 2 is required that the CPA have adequate knowledge of the subject matter over which they is attestation. Okay, for example, for CPA as to attest the company's compliance with environmental protection laws, they need to throughout the all knowledge of the law and also method that company used to assure the compliance. Okay. For the Standard 3, Standard 3 is required that the CPA CPA be able to evaluate the subject matter against criteria that are suitable and available to user. Okay, as we have to know, by using this example of environmental protection law, measurement difficulties or lack of specific criteria may make it difficult for the CPA to conclude that whether this one is compliance or not compliance. Okay. Okay, next, to provide additional guidance for doing attestation engagement, the auditing standard board of the AICPA issues statement on standard for attestation engagement, which is SSAE. Okay, these are normally called attestation standard. Okay, the auditing standard and those that should be addressed by attestation standard, even though both are attestation. Okay, in general, auditing standard apply to attestations that deal with providing assurance on historical financial statement, including one or more parts of those statement. Okay, this may include audit of financial statement prepared in accordance with accounting standard or some others comprehensive basis of accounting, audit of only a balance sheet, and also audits of individual accounts. Okay, next we proceed to the next slide, which is the auditing standard boards decide not to attempt to define the potential boundaries for attestation engagement, except in the conceptual term, because new services are likely to arise. Okay, for example, For example, PricewaterhouseCoopers has been attesting to the balloting for the Miss American contest for decades, but attesting to compliance with environmental protection laws start only in recent years. Okay. The AICPA and the Canadian Institute of Chartered Accountants have jointly developed assurance service related to e-commerce and information technology. This group of service known as Web Trust and also Sys Trust are performed under the attestation standard. Okay, in this group of service, which is Web Trust and also Sys Trust, someone will explain to the next learning objective. Okay. In addition, the AICPA has developed a specific attestation standard in the following area, which are okay. For the first one is prospective financial statement. Second is report on financial control at service organization, and the third is pro forma financial information. Fourth, report on internal control over financial reporting for private companies. 5 is compliance with law and regulation. 6, agreed upon procedure engagement, and the last one is management discussion and analysis. Okay. So we go to the next slide, which is the last slide. Okay, based on this slide, you can refer to the next slide, which is I will provide you the example of examination report under the attestation standard in figure 25.6. Okay, so standard are necessary for this type of engagement because CPA already performed this service insufficiently large number to need more specific guidance than the general attestation standard provide. Okay. However, the absence of specific standard for a type of service does not imply that it is inappropriate to provide a service. Okay. To provide such a service. Okay, the attestation standard define the three level of engagement and related form of conclusion. Okay, for the first level is examination, second is review, and also the third is agreed upon procedure. Okay. In addition, compilation engagement are defined for prospective financial statement. Okay, we go through one by one, which is firstly is examination. Okay, an examination result in a positive conclusion. Okay, in this type of report, the CPA makes a direct statement about whether the presentation of the attestation, presentation of the assertion taken as a whole confirm to the applicable criteria. Okay, based on the figure 25.6, which is the next slide. Okay, as we can see, an examination report written under the general guidance of the attestation standard. Okay, in this is for an engagement to determine that the rate of return on a hypothetical portfolio based on brokerage firms by sell recommendation is correct, as represent in the firm promotional materials. Okay, a report on examination is unrestricted as to this distributions by the client after it is issued. Okay, this means that a client can distribute that the information widely, including to prospective investor and for sale and marketing purpose. Okay, for the next level, which is a review. Okay, in a review, the CPA provide a negative assurance conclusion. Why negative conclusion? Because for a negative assurance report, the CPA report state whether any information come to the CPA's attention to indicate that the assertion are not presented in all material respect in conformity with the applicable criteria. Okay, next we move to the next level, which is a review. Okay, in a review, the CPA provide a negative assurance conclusion. Okay, for a negative assurance report, the CPA reports state that whether any information came to the CPA attention to indicate that the assertion are not presented in the all material respect in conformity with the applicable criteria. Okay, a review report is also unrestricted in its distribution. Okay, review engagement are prohibited for most service where specified attestation standard have been issued, such as prospective financial statement, because of the difficulty of setting standard for the limited assurance provided by review. Okay, last, the third level of engagement is agreed upon procedure. Okay, in an agreed upon procedure engagement, all the procedure the CPA will perform are agreed upon by the CPA. Okay, the responsible party making the assertion and the specific person who are the who are intended user to the CPA report. Okay, the degree of assurance include in such a report. A report varies with the specific procedure agreed to and perform. Okay, accordingly, such a report are limited in their distribution to only that involve parties who know the procedure the CPA will perform and the level of assurance resulting from them. Okay, the report should include a statement of what procedure engagement and the CPA agreed to and what the CPA found in performing the procedure. Okay, So I think that's all from me. Thank you.
Assalamualaikum and hi madam. I am Nurnajeha binti Saidun. I will present about the next slide. So in learning objective 4, we will understand the nature of web trust and trust assurance services. In a web trust attestation engagement, a client engages a certified public accountant, which is CPA, to provide reasonable assurance that a company's website complies with a certain trust service principle and criteria for one or more aspects of e-commerce activity. A site that meets the trust service principle is eligible to display the web trust electronic seal on its transaction or order page, which is intended to give users of the site assurance about the site's credibility. At least once every 12 months, the certified public accountant, which is CPA firm, updates its testing of the e-commerce aspects to ensure that the client site continues to comply with the trust service principle and criteria. The CPA also updates its report. If the site does not comply, the site can be revoked. There are 5 trust principles, which are security, availability, processing and integrity, online privacy and confidentiality. So let's read one by one. So first is security, which the entity should disclose and maintain compliance with its security practice to ensuring that the system is protected against unauthorized access. They include both physical and logical. Second, availability. The entity should disclose and maintain compliance with its availability practice to ensuring that the system is available for operation and use as committed or agreed. Third is processing integrity. The entity should disclose and maintain compliance with its processing integrity to ensuring that the system processing is complete, accurate, timely, and authorized. Next is online privacy. The entity should disclose and maintain compliance with its online privacy practice to ensuring that the personal information obtained as a result of e-commerce is collected, used, disclosed, and retained as committed or agreed. Last but not least is confidentiality. The entity should disclose and maintain compliance with its confidentiality practice to ensuring that information designated as confidential is protected as committed or agreed. A trust engagement, the trust licensed certified public accountant CPA evaluate a company computer system using trust service principle and criteria. The trust service provides assurance to management, director or third party about the reliability of information system used to generate real-time information. The certified public accountant CPA then does tests to determine whether those controls were operating effectively during a specified period. If the system meets the requirement of the trust services principle, an examination level unqualified attestation report is issued under American Institute of Certified Public Accountant AICPA attestation standards. An organization may request a trust engagement for a system that is in pre-implementation phase. For this type of engagement, the Certified Public Accountant CPA report on the suitability of design control and the report cover a point in time rather than a period of time.
Assalamualaikum madam, I am Nurul Izzah binti Rashid. I will describe engagements to report on internal control at service organisation. These engagements have historically been referred to as SAS 70 engagements because the guidance for service auditors was contained in that auditing standard. The Auditing Standard Board recently moved the guidance for service auditors from auditing standards to the attestation standards. Those standards provide guidance for services auditors who are engaged by a service organisation to issue of 2 types of reports. Type 1 report, report on a description of service organisation system and the suitability of the design of controls. Type 2 reports, report on a description of a service organisation system and the suitability of the design and operating effectiveness of controls. Type 1 report, the service auditor expresses an opinion about the fairness of the description of the service organisation system and an opinion about the suitability of the design of controls in that systems. Obtain and read the system description prepared by the organisation management. Assesses whether the description is fairly presented. In making that assessment, The service auditor evaluates whether management use suitable criteria in preparing and presenting the service organization system description. Type 1 engagements. The service auditor also perform procedure to obtain sufficient available evidence to obtain reasonable assurance about the suitability of the design of controls. In making the services, the auditor evaluates whether controls have been designed to address risk treating the achievement of controls objective and whether those controls, if operating as described, provide reasonable assurance that those risks would not prevent achievement of control objective. Type 2 report. The services auditor contain the two opinions about the description and suitability of the design controls that are provided in a type report 1. Opinion about the operating effectiveness of controls throughout the period. Type 2 engagement. The services auditor perform tests of the operating effectiveness of the controls at the service organization. In addition to procedure performed in the Type 1 engagement, when testing controls at the services organizations, the service perform tests of controls using procedures similar to those described in early chapter to obtain sufficient appropriate evidence about the operating effectiveness of those controls throughout the period under audit.
Hi, my name is Najwa. So I will be presenting about learning objective 6, which is understand special engagement to attest to prospective financial statement. So prospective financial statement refer to predicted or expected financial statement in some future period, which is income statement, or future date called as a balance sheet. For an example, management predictions of the income statement and balance sheet 1 year in the future. Okay, two types of prospective financial statement are forecast and projections. For forecast, the prospective financial statement that present an entity's expected financial positions, result of operations, and cash flow to the best of the responsible parties' knowledge and belief. Okay, so usually that using this information is a bank as a part of loan applications. The second types of prospective financial statement is projections. So forecast and projections are quite similar, but projections sometimes prepare to present one or more hypothetical assumptions. Hypothetical assumption is to present conditions of course of actions that are necessary expected to occur, but it consists with the purpose of projections. So for the example of projections is projected financial statement might assume the company is able to increase their price of its primary product by 10% with no reductions in units sold. Prospective financial statement prepare for two audience, which is limited and general. For general, prepare for use by any third party, such as the inclusions of financial forecast in prospectus for sale of hospital bonds. Second is limited. Limited is prepared for solely for third party, with whom to responsible party dealing directly, such as inclusion of financial projections in a bank loan application document. Next is type of engagement. This is to avoid statement confusions among the user. First is an examination engagement in which the CPA obtains satisfaction as to completeness and reasonable of the assumptions. Second is a compilations engagement in which the CPA is primarily involved with the computational accuracy of the statement and not reasonable of the assumptions. Last is an agree upon procedure engagement in which the CPA and all users of the statement agree and specific limited attestations procedure. This is examinations of prospective financial statement. There are 4 elements. First is evaluating the preparations of the prospective financial statement. Second is evaluating the support underlying the assumptions. Third is evaluating the presentations of the prospective financial statement for conformity with AICPA presentations guideline. Lastly is issuing an examinations report.
Next, we go to learning objective 7, which is describe agreed open procedure engagement. Agreed open procedure engagement is a statement that an agreed open procedure engagement involves the auditor and management or a third-party user agree that the audit will limited to a certain specific audit procedure. These are referred to as procedure and finding engagement. So here we can see the difference between statement on auditing standard and statement or standard for attestation engagement. Statement on auditing standard deal with financial statement item. For example, like certified public accountant might do a agreed open procedure on the gross sale account for a lease agreement. For statement on standard for attestation engagement, deal with non-financial statement matters. For example, like certified public accountant might calculate the internal rate of return, beta risk for measuring volatility, and other relevant information for interest to investor for a mutual fund.
Learning objective 8. Describe other audit and limited assurance engagement related to historical financial statement. For other comprehensive basis of accounting, first is cash or modified cash basis. These only cash receipt and disbursement are recorded. The cash basis is only follow except for certain item such as fixed asset and depreciation. Second is regulatory agency. For example of this one, this include the uniform system of the requirement of railroads, utilities, and some insurance company. The third one is income tax basis. The same measurement rule used for filing tax return are often used for financial statement preparations. Usually that use this method are small business. Last one is definite set of criteria. An example for this one is the price level basis of accounting, that the method of accounting must be applied to all material items in the financial statement. For specific element account or item, the auditor are often asked to audit and issue report on specific aspect of financial statement. There are two different in specific element, account or item. First is materiality is defined by the item audited. This is to require more evidence than if the item being verified is just one of many part of the statement. For example, if the sales account is being reported on separately, a smaller misstatement will be considered than it is when sales are one of many accounts in a full financial statement audit. The second one is GAAP does not apply. This is the first standard of reporting under GAAP does not apply because the presentation of element accounts or item is not a financial statement prepared in accordance with applicable accounting standards. Last is debt compliance letter and similar report. Auditor may issue reports on debt compliance and similar engagement as separate report or by adding a paragraph after the opinion paragraph as part of a report that expresses their opinion on the financial statement. In either case, the auditor must observe the following matter in such engagement, which is engagements and report should be limited to compliance matter the auditor is qualified to evaluate. Next, the auditor should provide a debt compliance letter only for a client for whom the auditor has done an audit of the overall financial statement. And lastly, the auditor opinion is in the form of a negativity assurance stating that nothing came to the auditor's attention that would lead the auditor to believe there was a non-compliance.
So that's all from us. Thank you.